Hey, what's up guys, John here. Nearly 25% of all Americans with credit card debt are making small bare minimum payments to try to get by.
Millions of Americans are feeling the financial sting of mounting credit card debt.
Nationwide, it surpassed $1 trillion for the first time ever.
And what I believe is going to happen next is going to shock everybody. I personally believe we're going to continue to see the cost of living rise.
Cost of everything is going up these days. That's because it is. From groceries and appliances to even car insurance shows up. Everything is up by double digits.
More Americans are taking on debt and relying on credit cards to make ends meet.
But with it, there's one thing that Americans can do right now to offset the rising costs of inflation and pivot and move around the chaos. There's only one thing. I'm going to break it down and show you exactly what that is and exactly what people should be doing. Because as energy prices go up, food prices continue to go up, everything continues to rise, and a job market continues to kind of erode and fall apart, unfortunately.
The layoffs are already piling up this year, and we're just a few weeks into 2024.
Google cutting hundreds of jobs.
UPS joins several high-profile companies that have recently announced layoffs, among them Xerox, Wayfair, and Amazon.
It's going to really make a big difference. So I'm going to break it down. I'm going to give you the facts, show you exactly what you can do if you're in a situation right now where you're kind of struggling. You don't know what to do and how to kind of pivot and move around this. I'll show you how to do that and what you can do to invest to position yourself in a world that is pretty uncertain. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's really going on in America. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So nearly 25% of Americans with debt are putting less money towards credit card payments. People are really struggling. This just came out a couple hours ago. So total credit card debt in the U.S. has reached a record high, putting people where people are putting less money towards paying it down. Americans collectively hold $1.13 trillion in credit card debt at the end of December, according to the Federal Reserve Bank of New York. Now, this is just a rocket ship from 2021. On an individual level, Americans carried credit card balances averaging $7,930 at the end of 2023. Now, what many people don't realize is when they hold a balance of, let's call it $8,000 or $7,932, and they're making the minimum payment. So let's just say on this, minimum payment would be maybe $200 a month, right? You would pay $14,306. Now, if you were to, let's say, take that to $175 a month, it would go from $14,000 in about a 9-year payment period to, well, you have to pay at least $185. So just reducing it, $15, just $15, you would pay $39,000. $39,000. So you would go from a period of $14,000 to $39,000, taking 20 years to pay off. 20 years. Many people don't realize that every time the Federal Reserve increases interest rates, it slowly but surely erodes the potential of millions and millions of Americans to get out of debt. It puts them in the hole in a really big way. Presently, the typical U.S. household needed to pay $213 more a month in January to purchase the same goods and services it did 1 year ago. So if your income is not increasing, 214 times 12 months, call it $4,500 a year. If you're not making $4,500 per year more this year than last, then your standard of living is eroding. Now, how many people are, increasing, their wages at that velocity? Not that many, right? So we're going to continue to see the erosion of living standards here in America. While the majority of those credit card debt are allocating to the same or more money towards chipping away at their balances, nearly a quarter say they're contributing less. Debt holders say they're putting around $363 per month towards their credit card debt in 2023, slightly less than the $430 they paid monthly. And slightly, that's pretty substantial, right? That's pretty substantial. Now, why are credit card APRs so high? The reason, there's no other reason other than greed, consumer advocates say. Well, I would completely disagree with that, because when you look at default rates right now for subprime borrowers, default rates are 15.4%. So if you were to lend somebody money, maybe you owned a credit card company, and 15 of 100 people would not pay you back, would you charge a low interest rate? No. You would offset your risk by charging a very high interest rate, right? And the higher interest rates go with the Fed, the higher, they're going to need to charge, because the more defaults they're going to continue to have. So when you have a subprime borrower, somebody with a credit score of 580 to 619, that's considered a risky borrower. And so you have 15 times the likelihood that that borrower is not going to pay you back compared to someone with good credit of, 1%. So 1 out of 100 is not going to pay you back on prime, and then 15 out of 100 are not going to pay you back on subprime. So when you look at what interest rates are right now, look at this. Interest rates are, for subprime on, let's say, an auto loan, 5.61%, and deep subprime, 14%. Let's say 600 credit score, you're looking at 11, 12%, 10, 11, 12% in that range, right? Well, if you have a traditional credit card, the average credit score in America, and you're just getting a regular old credit card, you're looking at 27%, 27.91%. So you look at the board. If you have good credit, you can get 0% APR cards all day long, 12, 24 months, 18 months, 0% interest. And compared to 27, 28%. Same thing with an auto loan. But many people don't realize this, is that when let's say you're buying a car, and it's a $40,000 car, and you are, let's say, have a good credit score, and that good credit score is, we'll just call it, maybe we'll put it at somewhere in like the 700 range, 780, 800, in that range. Maybe you're somewhere around 7%, right? On a 7% interest rate, you're looking at a $693 payment. Now, if you have bad credit, it's 13%. 13%, somewhere in this range here between 500 to between 300 and 600. And the difference is in monthly payments, it would go from $796 per month, right, compared to $693. So the difference comes out to $100 a month. Now, over a 5-year term, a 60-month term, you'd spend an extra $6,199 just on that car, which is, on a $40,000 purchase, it's 15% of the entire value of that car. But what many people don't realize is that your auto insurance, Allstate, Progressive, State Farm, and Geico, they'll look at your credit score and they'll gauge the type of risk that they take with, issuing you a policy. And says, yes, you can be denied car insurance coverage if you have bad credit. However, most companies will likely give you a higher insurance premium if you have a lower credit score. So not only is it the $6,000, right, the $6,000 that someone would pay on a $40,000 purchase, but they'll also pay more for insurance. So it might be $7,000, $8,000, maybe more, just by having bad credit to good credit on a car purchase alone, right? So if you're looking out at inflation right now at, let's call it 20% or 30% of the last couple of years, and your income is not increasing 20, 30%, the only thing that you can possibly do is look at the interest, look at the expense, look at where your money's going and where it's flowing, right? If your money is mainly flowing to interest and it's going to pay off credit card companies, that's a broken option, right? You need to get out of that problem. There are ways to get out of it. So here's one way. So let's say on just a $10,000 balance, just for context, a $10,000 balance paying $200 a month or $220 a month, this is not an option. You have to pay more than, let's just call it $250. On $250 a month, that's not an option, paying $18,000. What would be an option is some of these balance transfer credit cards. Now, there are a lot of these cards. 21 months, no interest, right? You need excellent credit to get this. You could literally, if you have bad credit right now, and let's say you have $10,000, $20,000 in credit card debt, if you fix your credit, you can put yourself in a position to try to apply and get approved for one of these cards and transfer the entire balance at 0%. And so if you have, let's call it $10,000, you'd have 21 months to pay off that debt. And maybe you apply, a couple $100 a month, and you pay off 80% of it, 70% of it before the end of the 21-month period, and then you try to transfer it again, or get more aggressive and just try to pay the whole thing off inside of 21 months and not waste the tens of thousands on credit card interest. And the same with the many thousands in auto loans and student loans, and all of this additional waste. This could all be removed if you have great credit. And the same thing here, excellent credit. All these different cards, 0%, 21 months. Same exact thing, excellent credit. And the excellent to good credit, 0 to 21 months. Same thing here, platinum, excellent to good credit. This is what's going to happen. We're going to see more and more and more credit card companies over the next year. I promise you. Over the next year, it's going to be banks, lenders as well. They're going to be looking very, very closely on what loans are going south that they're issuing. And the loans that are going to go south are the risky borrowers, because what jobs are going to get greatly impacted going forward? It's a lot of, retail jobs, a lot of, everyday Americans, right? And the everyday American, the average credit score is 698. 698. It's not great. It's, many people think having a 700 score is good. It's not. You want to have 780, 800 credit scores. You want to be top tier of a borrower. So when you apply for financing, you can get it. When we walk into 2024 and Q2 and Q3 and Q4 deeper into the year, we're going to see more and more delinquencies pick up. And so as that begins to happen, they're going to get more and more careful in whom they lend money to. And if you take in, the facts, which is inflation's likely going to get a lot worse. We're going to likely see more countries continue to, de-dollarize. We're going to see more inflation here, more money printing. We're going to see a lot more of this here in America. And interest rates are going to be a lot higher for longer. And so you start to, add 2 and 2 together. Banks are going to tighten up funding, and dollar's not going to go as far. So just be very careful with this, and just realize that if you have great credit and you have stable income and you're able to save money, and you can take advantage of, Fannie Mae and Freddie Mac, they have a new 5% down payment program to buy between 2 to 4 units, 5% down, right? So you could buy one of these deals, 5% down. Maybe you could even buy it with the savings from, the waste in interest paid to auto lenders and credit card companies, and, put yourself on the fast track. I believe that we're walking into a window here the next couple of years to accumulate wealth. And after that, I think the door is going to shut. I think we're going to see a consolidation of wealth, a dramatic consolidation of wealth from large corporations buying tons of single family homes. They're going to be really taking over, I think, the next 2 to 5 years. And so we have a very small window. So if you are thinking about getting out of debt, now's the time to do that. Drop it below. Let's have a conversation about this. If you'd like to fix your credit, or maybe you have some issues on your report, or you're not sure if it's worth fixing, we'd love to give you a free consultation at GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all on your credit report, go to GreatCreditFast.com, book a call below, and schedule a free strategy session. And I'll catch you next video.